The Modi government in India has now cleared historic tax reforms, slashing goods and services tax rates on several items and simplifying the entire tax structure. For more on what this means for businesses and consumers, we're going to bring in CNBC TV 18's Hormuz Fatakia, who joins us from Mumbai today. Hormuz, it's a big day and a huge announcement, a lot of sweeping reforms. Break down for us some of the major issues or some of the major things that were accomplished by these reforms that were discussed by the panel.
Big day indeed, and some big bang announcements made last night by the GST Council of India in line with the Prime Minister's address from Independence Day. Of course, there was an all-consensus decision that was taken to now have a two-slab GST structure, which will have a 5% rate and a 5% rate and an 18% rate, while the 12% and the 28% tax slabs will be done away with, and sin goods and luxury items will now attract a special 40% structure on the GST. But before I get into a deep dive on what gets cheaper and what not, let's also first listen in to what India's Finance Minister Nirmala Sitharaman said last night after the Council's meeting ended.
This reform is not just on rationalizing rates. It's also on structural reforms. It's also on ease of living, so that businesses can do their business of working together with the GST. Reduction from 28 to 18%. इसमें मिडिल क्लास के एस्पिरेशंस मीट करने वाले बहुत सारी चीज़ हैं. एयर कंडीशनिंग machines, TVs which are over 32 inches, all TVs now at 18%. ये I want to underline, all TVs are now at 18%, dishwashing machines, small cars, motorcycles equal to or less than 350 cc are all now coming to 18.
You just heard the Finance Minister. You just heard the Finance Minister there as to what has the decisions been taken for the middle class to boost consumption, and that shows in the rate structure as well. Now take a look at this. The items of daily essentials like hair oils, toothpaste, soaps, they go down to a 5% rate. Items like butter, ghee, the daily spread, the consumption items of daily use, the savory snacks, all of them go down to a 5% structure. Tractor and tire parts, they go to a 5% structure. On the automotive sector, the hybrid LPG and CNG cars not exceeding 1200 cc, they go down to an 18% rate from the earlier 28%. The motorcycles of 350 cc and lower, they go down to an 18% rate. Consumer durable items like air conditioners and television, as you just heard the Finance Minister say, that goes down to an 18% from the existing 28%. Cement goes down to 18%. Items of stationery, which earlier was part of the 12% slab, that will have no GST on all of these items. And footwear less than $30, that goes down to 5%, while above $30, that GST rate remains the same. Now, what about insurance companies? Of course, based on what analysts tell us, the insurance premiums being exempted from GST, that makes it costlier for the companies, but makes it cheaper for policyholders, and no significant impact on coal and on sectors like carbonated beverages.
So, Hormuz, pretty much good for the Indian consumer unless you're someone who's driving an SUV while smoking a cigarette and sipping a Coca-Cola. Otherwise, good if you're trying to go out there and actually buy more things. So it's good for the Indian consumer, but perhaps also meaning fewer tax revenues actually for the government. What did the government have to say about possible revenue shortfalls due to this overhaul?
The government did mention about this last night, that the compensation cess was discussed, and a lot of the state finance ministers who we spoke to, they mentioned that the loss from this two-rate structure is now pegged at almost $10 billion, but because of this 40% rate on sin goods and luxury items, that will bring in a revenue of around $5 billion. So the net revenue loss estimated is somewhere around $5 to $5.5 billion. Of course, this is basis the FY24 core consumption trends is what the Revenue Secretary explained last night during the press conference. Now they are expecting the compliance to improve because of this reduction in GST rates, and as compliance improves, and that will result in some buoyancy in tax revenues. They are also expecting this to remain financially sustainable. And of course, they also mentioned about the compensation cess, which will continue on specific goods like tobacco and tobacco products. And once the state payouts are discharged, then this compensation cess will be done away with. And once this compensation cess is done away with, the items that currently continue to attract a cess of this, like tobacco and tobacco products, all of them will now have a GST rate of 40% once the rationalization takes place. So overall, a positive move for the Indian consumer and a boost to the consumption as well. Of course, mind you, all of these consumption stocks have moved pretty significantly in light of the Prime Minister's address. So we need to keep an eye out on all of these names in today's session.